things just went from bad to worse, and I want to talk about the coming freak out in the stock market and how that can be and will be a bullish thing for AMC stock, in my personal opinion. Now, this video is not financial advice. This is not a recommendation. I will say it, and I have said it before. I don't care if you buy, hold, sell AMC stock. I don't care what you guys do. I know the trade, and that's why I talk about AMC here on this channel. I don't need to convince any of you guys. So if you're unconvinced of AMC, if you don't have your conviction there, probably not a video for you. But nonetheless, we're going to get into this information because it is big, guys. So first things first, it just went from bad to really bad, or bad to worse. Let's take a look at the Atlanta Fed GDP now, and this is one of the most reliable preliminary estimates that you can get. This is updated in real time as new data does come out, and this is from the Federal Reserve Bank of Atlanta, so it's not just some random analyst or whatever. It's from the Fed itself. Check this out. And if you guys have not seen the video yesterday, that's the craziest part about it. We were only at a negative 1% estimated Q2 GDP print. The latest estimate as of July 1st, which was yesterday, was a negative 2.1% GDP print for Q2. Now you might ask yourself, when do we get the actual advanced estimates for Q2 GDP data? Well, that comes out July 28th, and we have the Fed and their rate hike coming July 27th. As you guys can see right here, July 27th at 2 p.m., and we're expected to get a 50 basis point rate hike. Now, depending on what inflation comes in at and some other different things, if the markets start to price in a 75 basis point rate hike, or God forbid even a 1% rate hike, that is what the Fed is going to do. So we want to pay very close attention to this. But that GDP report coming the 28th is not going to be good, and it's lining up very precariously, we'll just call it that, with the Fed interest rate decision, which is July 27th, like I just said. And you also do have major company earnings that are going to be stretched between a little bit before then, probably around July 24th, 23rd. You're going to start to get some of your larger companies that start to report. And then until the end of that week, which is going to be, I believe Friday will be July 29th, you're going to get pretty much all of those major companies. You're going to get Apple, you're going to get Amazon, Google. They have not confirmed their earnings dates, but their earnings last quarter were around the 26th, 25th, 27th, 28th of, the end of Q1. So, guys, if those earnings are bad, if we go into a technical recession after the Fed just raised rates, at the same time we have quantitative tightening, also we have high energy prices, high inflation, that is a literal recipe for disaster. And why I'm talking about earnings potentially being a recipe for disaster is because earnings estimates have only went up for 2022. So yeah, we're getting bad retail spending data, bad retail sales, bad inventory data. You're literally seeing layoffs. You're seeing these companies firing people, laying people off, but yet analysts are only upgrading their earnings expectations. They're not dropping those earnings expectations. So heading into earnings, we're going to expect to see really good numbers. And if these companies, especially the over $1 trillion market cap companies, start to report bad earnings, well, that's where you are going to get a big flush out to the downside. And why I'm a little bit more concerned about this time frame rather than not is because if we go into this technical recession, if the markets start to get this dynamic of, oh shit, we're in a recession, the Fed is raising rates, there's no sign of stopping because inflation is so high, and now companies are really, taking a hit on earnings, it does a couple things. It's going to compress margin in people's accounts because the margin debt has only dropped by about 15% throughout 2022 comparatively to the NASDAQ, down about 30%, meaning if we get another 5, 10, 15% downside move in the NASDAQ and the S&P, you are going to be looking at massive rounds of margin calls. Portfolios are getting compressed right now. So even though, stock price values have went down, margin has not went down as much. So you're actually seeing margin as a percentage of people's portfolios actually going up. And that's what happens when you start to lose money when you are on margin. But at the same time as that, if you get these bad earnings with all this other shit, call it shit, going on in the economy with policy, monetary policy, right, going into recession, company bad earnings, well then you don't know where to value these companies because you start to say as an investor, I expected this because these analysts were expecting this and it came in way bad. And then you start to say, how bad will a recession affect this company? Like a company like Apple. If we went into a really bad recession, call it '08 over again, or possibly a depression, where do you value Apple at? If you don't know if they're going to do, $100 billion of revenue in a year or $400 billion of revenue in a year, you just don't know. So that's really a big problem I could see for the markets that could last for quite a while. But specifically with AMC stock, how this is potentially a positive thing is, one, AMC is in a sector of the economy that is very hot right now, right? Over the past 2 years, really your travel sectors have not been doing all so well, but now it's totally flip-flop. Your travel sectors are doing well fundamentally on paper, maybe not the stock price. There's a big disconnect there. But those companies are doing well, which AMC fits in that category. Over the last 2 years, it was goods companies, right? Car companies, right? Look at Tesla. People were going out buying new cars. People were going out buying PlayStations, Xboxes, iPhones, AirPods, Apple Watches, iPads, iMacs, all these goods, where that has really switched to services. So AMC on a fundamental basis has a lot going for it in that realm. Hopefully, fingers crossed, they can get their profit margins in line with a normal theater company, and then we could be looking at some fundamental share appreciation in that realm. But at the same time, when you see that margin get compressed and when margin becomes a larger percentage of hedge funds portfolios, and granted, when you're seeing hedge funds left and right going bankrupt or very close to going bankrupt, you start to get to a moment in time where if AMC makes even the slightest move to the upside, and these hedge fund portfolios have so much margin, they typically have to start covering a lot sooner rather than not, right? Back in January, back in June, stocks were hitting all-time highs. Margin debt was a less percentage of hedge funds accounts or portfolios, and they didn't have to cover if they didn't want to. Cost of borrow rates were a lot cheaper, right? Because capital was a lot cheaper, so on and so forth. I can make a whole video going over just this specifically. But long story short, if we can just get a catalyst for AMC stock, that's when you could see the price of AMC move up in a big way, and then you could start to see margin calls possibly to a degree and a velocity that we have not seen in a very long time. You might have to look back to June to see margin calls to the extent of what we could possibly see if this market situation does play out exactly like I think it will. Now, nonetheless, that is the case for AMC stock. With that being said, we still need a catalyst, so don't be confused. If the markets just crash by themselves due to these events that I've laid out, it's not going to cause AMC just to rally for no reason. You have to see a degree of a catalyst. Now, the estimated short interest of free float, I do want to call this out again because I do think it's very important to acknowledge. It's only at 18.8%, 7 days ago at 22.5%. Now, I don't believe these numbers. I think, simply put, you've seen some shares being returned, and Ortex has estimated that some shorts were actually covered because they were returned. And as you guys do know, when shorts cover, it just looks like shares being returned, and it's not necessarily right. Like 16.96 million shares returned for, hold on, for Thursday it says 18 million shares returned. Yesterday, 16.96 million shares returned. It's probably just the free flow out on loan that is being returned, not shorts that are actually covering. I think that's pretty easy to see given what has happened with the actual stock price, the chart of AMC stock. Shorts have not covered, but Ortex, it looks the same when the data comes in, so they're just changing around their estimates, but the short interest is actually still well over 20% in my personal opinion. $1.31 billion worth of short positions on AMC stock. Free flow out on loan reduced from 37% now down to 29.79%. Shares out on loan 190.44 million 7 days ago, now sitting at 153.56 million. Days to cover 3.53. Cost to borrow 17.06, up about 2% from 7 days ago. 100% share utilization. And you might be asking yourself, why would these hedge funds just start returning a lot of shares of AMC without actually selling them short? And I think it's because the risk to reward profile doesn't make a lot of sense. It doesn't make a lot of sense to short AMC at this current level unless you thought like the business was going out of bankrupt, right? You're only at roughly a 1 price to sales ratio, and there is a lot of different initiatives AMC has done to grow the business in that realm. So it just doesn't make a lot of sense to be short on AMC stock on a fundamental basis. And some hedge funds do follow risk management strategies. Some of them don't. And those that do follow risk management strategies know what I'm saying is correct. On a risk to reward basis, it's not worth going short on AMC stock given where the fundamental aspect of their business is going. So there is that. The cost to borrow rate sitting at 41.45%, cost to borrow average at 15.71%, cost to borrow minimum 0.97%. As far as option activity, that was actually very bullish for Thursday and Friday. You could see for Friday, 5 orders totaling $437.73 thousand, positive order value of 75%. So very, very bullish there. Wednesday actually had a positive order value of 91%, or Thursday. It's 1 day delayed, but this was actually the data for Friday, and this was actually the data for Thursday. And you've seen 6 orders totaling 819.41 thousand. Like I said, positive order value of 91%. The max pain for that big expiration, that option expiration, which is July 15th, is $16 per share. And if we look at the Stonko Tracker data, I'm sure you guys have seen this already. Next week, not going to be a very important week, even though if the price of the stock does make a move up, if we get a catalyst next week, which next week is going to be a very important week as far as data that is going to be coming out, and we'll talk about that a little bit later, but you could see a gamma squeeze even for July 15th, that expiration, even this upcoming week, just because there's a lot of options that are currently very cheap for that July 15th expiration that would have to be hedged out for if AMC started to break above key levels like the $15 level, the $20 level, right? So hopefully that makes some sense. You do see about 29,000 calls that are currently in the money, 458,000 calls that are out of the money, and puts that are in the money sitting at about 87,000. So I think it goes without saying at this point, but July 15th is going to be a very important day. And really from now until July 15th, you could see a pretty explosive move to the upside if, there's something happens, a data point comes out, whatever it tends to be, whatever the reason is, it could be very explosive when it does eventually happen. Now, if we take a look at the actual technical analysis, on Friday, AMC stock was down marginally, down about 2 cents in regular trading, down 4 cents in after hours trading, all in all, down about 0.45% on the day. You guys can also notice this very clear uptrend. It's been slow and steady, but that is how we like it, slow and steady uptrends. Even when the markets were selling off and hitting newer lows, well, AMC continued to hold the uptrend from the lows that we set back in May, whereas the overall stock market, the S&P, didn't hit their 2022 lows until June 17th, and actually during this time we were hitting higher highs. We were actually up 6.3% the day the stock market hit a new 2022 low on June 17th. We're hardly in July. I'm getting a little bit ahead of myself, but nonetheless, if we look at this on a technical basis, really the last couple of days, the 50-day moving average is where we have held up at. We have found support, and we are really trying to test out and break above the descending level of resistance. And we broke out above that by a decent amount, and then we ended up coming back down as the markets did slip a little bit as AMC stopped playing along. But we're firmly in between this resistance level, this descending line of resistance, as well as the 50-day moving average level of support. So I do want to see a breakout to the upside. And as you guys do know, like I just said, on June 17th, when we did hit that low for the S&P in 2022, right around 362 on the S&P, you actually went up 6.3% that day without any news. And 2 days before that, you went up 7%. So it's very possible to get big green days on big red days in the markets, but it doesn't happen all the time. You definitely want to see that break above this level. Now, as far as the RSI, that's at 52.88, so pretty neutral overall. The neutral level is 50, 52.88. That is very neutral in my book. The MACD is still bullish, but it's not showing you any clear indication of anything. We're on a slight uptrend, so I would expect this to be slightly bullish, and that's exactly what we are seeing. So that is going to be all for this video. Hit that like button and subscribe to the channel. Let me know what you guys think about this market crash scenario. We're going to talk about it a little bit more. I want to lay it all out and really have a video you guys can come back to and watch really once we get closer to the end of July. So hopefully it can help you guys make some money. That's how I'm fully positioned. Don't take my word for it. Anything can happen. Earnings could be spectacular, but it doesn't look very likely right now, and it looks like that's probably when you're going to flush out and hit newer lows in the stock market. So that is going to be all for this video. Hit that like button and subscribe to the channel. Let me know your thoughts, like I said, down below in the comment section. Get your free stock with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the description as well. I think this is the opportunity that a lot of people have been waiting for. This is the time, in my personal opinion, even after Friday's 1% rally in the S&P, you're going to get a lot better prices on downside put protection. The pain is not over, and I do think we are in for newer lows. So thank you guys for watching. Enjoy your weekends. I will see you in the next one.